Welcome, everyone. I'm TJ McConville, Chief Investment Officer at Becker Capital. I'm joined today by my colleague, Deidre Chris Russoff, a director and bond manager.
There's something about the summer and the sun in the Pacific Northwest that brings out the best in all of us.
Yes, summer is known as a carefree time, but the truth is that today we're coping with plenty of cares in the world.
Yet summer still brings that glow of optimism, and I think that's exactly the kind of mindset to harness as we consider our finances.
We've got a lot to cover today. First, I'll give a brief overview of the latest developments in markets, and then Deidre's here to share some interesting opportunities in the world of bonds. We've all experienced a summer thunderstorm, the one that rolls in unexpectedly and sends us running for cover, only to clear up just as quickly and reveal sunny skies. That's how the markets have felt this spring and early summer. Now, this feeling of sudden unease followed by relief could be what to expect for a while. There's been ample talk about the effects of tariffs, tax policy, continued high interest rates, inflation, and global conflict. Yet the markets continue to show resilience. And we're here to help you navigate through this uncertainty. And we're finding some attractive opportunities along the way. We realize that watching day-to-day market fluctuations can be exhausting. So if you want to tune down the news because it is summer, consider this your hall pass to focus more on summer activities. Know that we'll continue to monitor the markets closely and be ready if and when storms reappear. Now I'd like to turn it over to Deidre, who has a brief summer school session on municipal bonds. I think you'll find it interesting, as this is an asset class we find even some professional investors might not fully understand.
The school metaphor is apt because muni bonds are what builds our schools and our roads, our hospitals, and other public buildings and infrastructure. Muni bonds may sound about as exciting as what you learned in pre-calc, but when you're looking at yields of 5, 6, or 7%, suddenly bonds get interesting really fast. Here's why, especially for Oregonians who are very familiar with taxes. Because muni bonds are tax exempt, they may show a yield that looks modest, let's say 3.5%, but that's actually your after-tax return. So if you're in Oregon's higher tax brackets, that tax-free yield is equivalent to earning about 7.1% on a taxable investment. And it's a high-quality one, especially given the extensive research that we do. For our clients in Washington, Idaho, and across the country, muni bonds can be beneficial for you too. Becker Capital clients benefit from our open trading architecture that allows us to buy individual bonds from any broker across the country. Take the most recent Portland Public School bond. As the largest school bond offering in Oregon's history, it got the attention of every firm in the country. But what about North Clackamas, which recently passed a $14 million school bond deal? It's attractive, but it's not going to turn as many of the big managers' heads. However, Becker Capital is interested in these smaller deals. Bond brokers across the country know that I'm constantly looking for solid Pacific Northwest bonds. We'd love to talk about how that can work for you.
Exciting times in bonds, Deidre. I know our clients appreciate the energy, insight, and experience you bring to these strategies.
And now, school is officially out. Your only homework is to enjoy the rest of the summer and let us worry about the markets.
As always, thank you for trusting us at Becker Capital. We are so fortunate to be able to serve you.
Until next time, have a great summer.